Everyone for coming out here in this graveyard shift. And yeah, nice to see a lot of familiar faces in the audience. So we'll get right into it. So I'd just like to call up my very esteemed panel of experienced arbitrageurs. So we've got Carel de Villiers from Shiftly. We give him a round of applause. And then we've got Scherzer from Future Forex.
Woo! All right.
All right, so crypto arbitrage, I think, has been almost a household brand amongst crypto native South Africans for quite a while. Most of you who've been in this space for the last sort of 10 years would have probably been involved in some way or form. And if you haven't, I suppose you've got an opportunity now to learn how you can. So I want to break this, and also it's very interactive, so please ask questions. Yeah, we can make this pretty open, and I'm sure everyone's keen on making this as interesting as possible. So please ask questions as we go. But I think how we'll break it up is we'll just talk a bit about how this all originated and what it actually is, and then talk a little bit about what's going on today and the current state of things, and then have a forward-looking discussion about what things could be and what that means for folks in the industry. So yeah, just to start things out, and maybe we'll start with you, Carel. Just would you maybe walk us through how this all started back, in 2013 or so when it all went, and then just maybe bring us up to today and maybe explain in that process what we're actually talking about in the South African context of crypto arb.
Sure, thanks, Blake. So back in the day, I'm sure all of you know Luno used to be called BitX. I actually attended a meetup back in the day, and I realized that the price of Bitcoin on BitX was priced more expensive than you could buy it on an overseas exchange, for example, like Bitstamp. If you converted the dollar price to rands, you saw that it was 3, 4, 5% more expensive to buy it with rands. And yeah, the arbitrage has existed since then, and it's still around today. It went as high as 30 to 35% in December 2017, November 2017. I think the lucky few that managed to execute the trade at that time did really well. And yeah, it's still around today. The reason it exists is because of capital controls. So as many of you know, South Africans can't send unlimited amounts of money out of the country to actually buy Bitcoin abroad. And yeah, I think that's a good summary. And
I also neglected, sorry, to let my panel introduce themselves properly. So
okay,
maybe just, Carel, maybe just tell us a little bit more about you and what you guys did at Shiftly as well.
Sure. Yeah, so I'm Carel. I'm the co-founder and CEO at a company called Shiftly. We make it easy for South Africans to benefit from this price difference, which I've just explained.
Well, awesome. Yeah, and then maybe just bit of context. So I think it's more than just making things easier. So these folks like Harry and Carel have built companies that are actually very important market participants in South Africa and actually create a lot of liquidity and allow the use cases that I think many of you are busy building on. So they're actually very important structural piece of creating a marketplace and allowing for folks to go the other direction in crypto. So they typically be on the sell side. But on that note, Harry, first of all, introduce yourself, so I don't forget that. And then secondly, maybe you can talk to us a little bit about how things have shaped up now and how you see the industry, and maybe sort of how you think about this as an investment product and what are you typically seeing in terms of your clients' discussions and how they're thinking about this.
Yeah, thanks, Blake. Firstly, how's it, guys? I'm Harry. I'm the CEO of Future Forex. We're a direct competitor of Shiftly, but luckily there's enough love to go around. So the logic is, we don't try to take clients from each other. We rather try to tell people who are not doing arbitrage that they really should be doing arbitrage, and then you can make your decision which provider to use. So to lean on Blake's question of let's talk about the current environment of crypto arbitrage. Well, there was a time where there was a 35% price gap back in 2017. Unfortunately, we're not in those lofty heights anymore. We're back at around 2% to sometimes 3% if we're lucky percent difference. And so the whole vehicle has largely changed. It's not that you can make tons of money off one trade. Rather, where you can make tons of money is by putting in money and cyclically sending that money abroad and bringing it back to South Africa, each time making, call it 1%. But if you do 50 trades in a year, suddenly you've made 50% per annum, which obviously far exceeds any other investment. And the question is, how can you have this low risk, high return thing? It doesn't make sense. We know from economic theory that if something has high return, in theory, it should have equally high risk. Well, I think the reason that crypto arbitrage exists and continues to exist is because, as Carel alluded to, it utilizes your exchange allowances. So you've only got 11 million rand to do this with per year. And I'm going to make a very bold claim, but I'm a very strong believer of this. If you have money available, and if you have excess allowance that you haven't used by the end of the year, so you're not using the full 11 million rand allowance, I really don't see a reason not to invest in crypto arbitrage. I'm an actuary, so I'm very well versed in financial instruments, and to me, this really is the best investment I've ever seen. And so the logic is that we need to teach crypto people that there's a way to make great fiat returns, which is still worth doing, which is what we're doing here. And then we also try to tell people who aren't crypto oriented at all that actually you can trust crypto when used correctly, and not even care about the prices of crypto to make excess returns. So that's what we've been doing as market participants.
Yeah, thanks, Harry. And maybe just to tag on to that about just the risk element, because I think what's a bit of a black box for most folks, and certainly people that I've spoken to, is you see these 50% returns over a year, and if you did the full 11 million, typically I think now it's a bit low, maybe making 150,000 or 200,000 rand out of that. Still very good investments. I mean, very hard to outperform that. But there is still risks, right? Like this is not, nothing's risk free. And maybe, Carel, you can just talk a little bit about what actually are the risks here.
Sure. So there's two different risks that you need to take into account. Firstly, I think some of you might have executed this trade by hand. You would have found that you have to convert your rands to foreign currency because you can't buy Bitcoin abroad with rands. You send that to a foreign exchange, and then you buy Bitcoin, for example, which you then send to a South African exchange, which you then sell back for rands, locking in that price premium. Now, this entire cycle that I've just explained takes, it can take, back in the day, it actually took a number of days, just because the banks were not processing these transactions same day, outward payments same day. So in this time that you're waiting, you've bought dollars, and while it feels like it seldomly happened back in the day, the rand can strengthen, which means that your dollars are now worth less. So you can actually end up losing. And the same can happen on the crypto leg. So for example, you can buy Bitcoin. We all know that it's extremely volatile. You can buy it at, argument's sake, R1 million a coin, and the price can dip to 900,000 rand a coin. So now you're actually down 10%, which is not what you're trying to do. So that's price risk, and the way that we eliminate that risk entirely is through something called hedging. So essentially we would execute the buy of crypto on the international side and the sell in South Africa at exactly the same point in time. So you're basically buying dollars, you're buying crypto with those dollars, and you're selling those dollars again at exactly the same point in time. And by doing so, you're obviously eliminating price risk because there's no time duration that can elapse and prices move. So that's the one big risk, and I highly recommend if you are looking to do arbitrage, use a service provider like Shiftly or Future Forex who actually hedges out those risks. Then the other big risk is counterparty risk. You are dealing with a counterparty, meaning that you are essentially entrusting companies like Shiftly or Future Forex to take good care of your funds and ensure that they're not using any service providers behind the scenes which perhaps are subject to risks. All of us know the stories behind FTX and the likes. Obviously, if your funds were being sent there, they might have been lost. So counterparty risk is a big one. How do you mitigate counterparty risk? I think it's quite an easy answer. You can do your own research. You can look on the FSCA's website. Is the service provider that you're using licensed, firstly? Secondly, do they have a Category 2 FSP license? The FSCA has said that crypto arbitrage is a Category 2 activity. So at the very least, the service provider that you're using must have a Category 2 FSP license. And then there's all the other checks you can do. You can look online, you can read reviews, etc., look at their track record, and so forth.
Yeah, Thanks, Carel. And just maybe talking about the licensing framework, Harry, obviously we've all become regulated. I think all three of us in the same year, more or less a couple of months after each other. And I think that's changed how changed the industry a lot. And maybe you can just comment a bit on what that's done for you guys and your thoughts about that.
Yeah, it's been fantastic, to be honest, because before licensing took place, there were some players who basically were doing the arbitrage, but without the level of expertise or, I don't know, level of requirements, solvency requirements, or maybe the checks required to do it systematically and in the right way. And those have been weeded out. So we're left with only good parties. If a party has been licensed, it means that they're audited, it means that their books have been checked, and the FSCA has effectively put a stamp to say, we're happy with the way you're doing things, we're happy with your checks, we're happy that you are doing what you say you're doing, and you're making money the way you said you would. And as a result, you know, it's been a boom. I've spoken to Carel offline about this, and we've both had a boom since then because of the logic that that was the legitimacy that was needed by the general public and by financial advisors, wealth advisors, to say, okay, this is something that's making a bit more sense, and with the returns on offer here, it feels silly not to go into this. So it's been massively important for us, and 2024 has been a boom of a year for crypto arbitrage because of it.
Yeah, definitely, and it's been great to see, you know, as the exchange also seeing more licensed operators starting to work with us. It's also improved our business, and we're seeing growth out of that too. So that's been exciting to see. Yeah, maybe just turning the looking glass towards the future, and starting to think a little bit about what could be, because you know there's obviously a structural element to this, to the market. It's a phenomenon that it exists primarily for regulatory reasons in South Africa. And of course, that can change in the future. So maybe, Carel, if you could put your tinfoil hat on and give us a prediction.
My tinfoil hat's always on.
And just let us know what you think is going to happen in the coming years, and maybe a little bit about how do you think that'll impact your business and all this ARB that's available.
Sure. So part of the reason the ARB exists is because there's a structural dislocation in the market. Essentially, we've got a unique scenario in South Africa where the supply of cryptocurrency to South Africa is capped. It's only individuals that may avail of their foreign capital allowances. That's the 1 million rand single discretionary allowance and 10 million rand foreign investment allowance to send funds offshore to buy crypto with, and then you can resell it in the South African market. Companies are not allowed to send funds out to buy crypto with, neither are trusts. So essentially, we've got this capped supply, but on the demand side in South Africa, both individuals and companies and trusts may purchase unlimited amounts of cryptocurrency on platforms like VALR, and that creates the premium. It's a simple economic supply and demand situation, and essentially, it's, I think, just tying into what Barry also alluded to earlier, with the premium being 35% at one point in time and now come down sort of 2% gross, is that the more and more people that are participating in this market, naturally the lower the premium will go. But at the same time, the more supply there is, the more liquidity it creates for demand. It deepens the order books on VALR. It enables more market participants. Perhaps now we're looking at institutional players that are buying in. And if they're South African domiciled, they will go to a platform like VALR to access that liquidity. So, yeah, to get back to your question, Blake, I think it'll still be around until there's structural change in the exchange control laws. Perhaps crypto will be included in the exchange control limits the same way we see it being included from a foreign exchange point of view. So perhaps limiting the amounts that individuals or companies can acquire. That'll definitely have an impact. But yeah, I think it was you that said it, Harry, so I'll quote you on it. 6 years ago I said it's still going to be around for 2 years, and 4 years ago I said it's still going to be around for another 2 years, and 2 years ago I said 2 years, and I'm saying 2 years today to all of you. So, yeah.
Yeah, thanks, Carel. I think we've all been waiting for this looming judgment. But Harry, I don't know if you've got any thoughts just on how this looks like and perhaps how you're thinking about it.
Yeah, look, as Carel said, we have no idea is the answer. We think we have an idea. Like, as he said, 5 years ago, we all said, 2 years and they'll regulate this thing. And that estimate hasn't changed, and it won't change because we just don't know how long it will be around. What we do know is the chances of it being around in, say, 20 years is low. It's low that something's not going to happen to cause this inefficiency to equalize, be it regulation, be it enough players in the market to squeeze it. At some point, this thing has to close, you would feel. The timelines, we have no idea, and that's why the logic is, let's make hay while the sun shines. Let's basically get in now before it's too late, because we don't know when that's going to be. But obviously, it's a big risk to our businesses when that closes. But as a consumer, it's not much risk. You just stop doing it. You stop making these great returns at the point where it's too low. So, it's a matter of we can guess and put tinfoil hats on and try make estimates. But the truth is that as a consumer, there's no reason not to get in early when it's still here.
Yeah, if anything, it'll just be less in the future. So
exactly,
best time was yesterday, but yeah, better time is now. So we've got a couple more minutes, and I know that I'm sure there may be some questions in the audience. So I'll stop here. I do have a few more questions for the panel, but maybe if there's a few questions from the audience, we can take those now. Tough crowd.
We've explained it perfectly.
All right. Well, if there's no more questions, then from the crowd, I'll ask again a bit later. But yeah, maybe a couple more things. So, Harry, I know Arb is not the only product that Future Forex offers. Do you want to maybe talk about how your business has evolved? Obviously, just given your thinking around the timelines and when this might end.
Yeah, absolutely. So obviously, while we don't know when this will end, we suspect that at some point it will. And we don't want to sort of live with our heads in the sand at Future Forex and realize that our team are all going to have to go and find other jobs when this closes. So what we've done in the interim is we've expanded our offering to also offer international payments. I mean, as part of the arbitrage process, we're sending money abroad, we're doing AIT approvals, there's a lot of international payment-related operations, and obviously we have the relationships with the banks, we have the expertise to be able to do this for clients cheaper and better than the banks. So as a second product, it made a lot of sense from a synergy point of view to open that up to clients, to say, if you want to do international payments as a business, as an individual, we've got the expertise, we've been doing this for years and years and years. And when crypto does become regulated and we can use crypto to send money out the country, we'll be first on the scene, having dealt with it for as long as we have. So it just made sense as a business to do that. But to be clear, our main sort of product does remain the arbitrage at present, while we're trying to expand the other. Yeah,
makes a lot of sense. Carel, I don't know, you may not want to share your next steps, but if you do, now's the time. But maybe just as a follow-on to that, I know your model actually of doing the ARB and Harry's model is a little bit different actually, and if you're comfortable to share maybe just a little bit more about how you've actually gone about building out this business. I know you use a lot of API-driven strategies, and I think some of the folks in the crowd would be interested in how you've actually built that out. So. Yeah, you got two questions to choose from.
Sure, I'll answer them both. Yeah, so firstly, we've I think they both bleed into each other, so it's pretty good questions. The way we set up the business from the get-go was always fully automated. So we're a small team. We are 14 people full-time behind Shiftly, and yeah, essentially we've always been, I think, crypto native and always basically focused on the arbitrage. I think that was our main goal, and it hasn't shifted yet. Although we are considering some other revenue streams and business models also in the traditional foreign exchange space, and a few others which I'm not going to share on too much. Whereas, as I understand it, Harry's business is more built on a relationship model, bigger team, more hands-on approach. So I think that's the big differentiation between the two services. Naturally, we're not trying to compete on stage, but yeah, in terms of how we use APIs, etc. So we've fully automated the customer onboarding process, which is quite intensive. We work very closely with Capitec Bank on opening bank accounts for our clients. If you sign up with us or with Future Forex, you'll get a dedicated bank account in your name. That's all done programmatically. You then get prompted to fund your account, and from there we will initiate your trading. It's fully automated, so yeah, foreign exchange gets bought, gets sent overseas. From there, Bitcoin gets bought and sold in a fully automated fashion. There's no humans. We don't have a trading desk with humans executing buys and sells. All gets done programmatically. When your trade completes, you get issued with a trading statement. Your funds get returned to your bank account, and I think this is something we didn't touch on, the SARS AIT process. So I'll just go back a little bit on that. So in order to access your 10 million rand foreign investment allowance, you actually need to apply for, they've now changed the name to Approval of International Transfer. You have to do that via SARS. It's actually the South African Reserve Bank that has pushed that responsibility onto SARS, and the outcome of that process is essentially SARS issuing you with a tax clearance status PIN saying, we approve you to send this money offshore because you're tax compliant. So that whole process is API driven on our side as well. We don't have a big tax department that's submitting these things. It's actually done by 4 individuals on our side. So yeah, once the PINs are then approved, then your next trade can take place. So essentially, once your first million is done on your single discretionary allowance, you fall into this cycle of applying for a PIN at SARS, waiting for it to be approved, and then once that PIN is approved, we can reinitiate the process, and then the cycle repeats itself until you've reached your specified limits for the calendar year, which is theoretically 11 million rand max.
Okay. Yeah, awesome. And Harry, just maybe rolling back a bit to the tax changes. I know recently actually there were quite a lot of changes, and Carel alluded to that with the change from the FIA to the ART. Do you maybe want to talk a bit about what happened there and what impact that had on the market and your business?
Yeah, so in a nutshell, they changed from FIA to AIT, which was similar, but they required a bit more information around international assets, if I remember correctly, which was something that wasn't as heavily required in the FIA approvals, which initially was a big change for us because we had a team doing FIAs who perfected that process. We had tech to make sure that it was filled in as efficiently as possible. And then suddenly it all changed, which in the short run was a bit irritating. But in the long run, it actually enhanced our value add, right? Because we do this for clients. And with it becoming more complicated, it's a bigger value add. And so it was one of those which was like a short-term pain, but long-term gain with becoming AIT. Because now, we want to add as much value as we can. Obviously, both of us have fully hedged solutions. We have we trade at optimal times, we use tech, we use everything we can to add value. But this was just another thing to add more value. Was when it went from FIA to AIT, suddenly the value was enhanced. And anything we can do to add value, we want to do. So yeah, it was a change which was initially a bit of work to get right. But now that we have got it right, I think, yeah, we're really happy the change happened effectively.
Yeah, awesome. So I think we're sort of nearing the end of our scheduled time. So I'll ask one more round of questions, and then I'll get into some closing comments. Any, gentlemen in this 4th row.
So I'm assuming you guys do the arbitrage the same way. Is there any other way to do arbitrage? Like an alternative method?
Yeah, I'm happy to answer that. So both Shiftly and Future Forex are essentially enabling its triangular arbitrage. So what that means is that there's 2 legs involved. As I've explained, there's a rand to foreign exchange leg, then there's a crypto back to rand leg. So that's basically fiat to crypto back to fiat arbitrage. However, you can also find that certain cryptocurrencies are priced different on different exchanges in different other jurisdictions where perhaps there isn't any exchange control. That creates a structural inefficiency. But for example, if you go and open an American exchange like Coinbase and you view the dollar price of Bitcoin and you look at the price on Kraken, which is priced in euros, and you convert to compare apples to apples, you might find that there are actually small differences. And it's interesting because the reason why those prices are very similar is because of other arbitragiers which are actually buying where it's cheaper and selling where it's more expensive. And by virtue of them doing that, they're actually trading those prices in line. So you can't do that as an individual by hand anymore. There's very sophisticated institutional clients who are doing that either in a proprietary fashion, i.e. for their own book, or offering that as a fund. Neither of us do that, but that's another form of arbitrage in the crypto asset space.
I'll also jump in there and say, you know, one of our competitors in the early days was people doing it themselves because they thought, you know, we can send money abroad, we can buy crypto abroad, we can send the crypto to South Africa, and we can immediately, when it arrives, sell it in South Africa at a profit. But over time, that's no longer really been feasible as an individual. Not only are the bank rates going to be too high and the rates you get from abroad too high, but also the risks of the rand dollar fluctuating, the cryptocurrency fluctuating in the time that you bring it in, it actually makes it unfeasible. And so we're at a point now where the only way you can exercise the South African arbitrage, which is the one we do, is through a provider. Without a provider, it's just not feasible anymore. So we've kind of changed, we've had a change in, I don't know, the environment, whereby previously it was a matter of, right, we need to add more value for the piece of the pie we take, we need to add more value than someone doing it themselves. And now there's just no way to do it yourselves, and we've really eked out all the value from third parties, etc., to make sure that we maximize profits to clients. So yeah, there's no real way of doing the South African arbitrage apart from through a provider, which puts us in a very nice position, but luckily we're both from companies who really are trying to maximize what we can give to clients. So yeah.
Yes, sir.
I quickly looked on your website, so it looks like you can get 0.88% in a 22-hour period. So so in effect, you put money in an account, you then do your thing, and that money just gets more. So what is the minimum amount that's feasible to do something like that?
Yeah, I'm happy to answer that. So essentially, if you look at costs, so there's this arbitrage gap that we've said is hovering around 2%. That's before any fees are taken into account. In order to execute that trade, you need to convert rands to dollars, and there you're going to pay a fee. And you also need to send those dollars, for example, abroad. And the only fixed fee in this entire cycle is a bank fee of 500 rand. So all the other fees are percentages. If you go on VALR's website, you'll see they charge 0.1% to buy and sell cryptocurrency. So yeah, you can just work out for yourself. If you're paying 500 rand and to send 100,000 rand abroad, that's 0.5% that you're losing in a gross arbitrage market of 2%. So a quarter of your profit has already been eroded. Whereas if you're doing, I'm taking an extreme example, if you're trading 500,000 rand at a time, 500 divided by 500,000 is only 0.1% of this gross 2% that you have that's on the table. So a larger amount would be more cost effective, but it also caps out, you know, if you're going even more extreme and say you're doing 1 million rand at a time, you know, that 0.1% only drops to 0.05, which isn't that significant anymore. And at that point, you also need to start taking risks into account, etc. So our minimum trade size is 200,000 rand, and we found that to be the sweet spot between number of trades and cost per trade. However, our clients are welcome to bump that amount up to 1 million rand. We generally don't allow clients to do more than 1 million rand at a time.
Thank you. Any other questions? Yes. Ooh, okay, one more. Okay.
How's it, guys? David from Currency Hub, also a direct competitor of Shiftly and Future Forex. Guys, what is the lowest level gross premium that you think you can operate at before it becomes an unattractive investment product in this risk category?
I'll take that one. Yeah, it's an interesting one because as the premium gets lower, the higher the trade size has to be to minimize third-party costs, right? So you've got a situation where, let's say, the premium goes as low as 1%. Now suddenly 100,000 rand makes very little sense because half of your profit is going to that 500 rand profit. And then on top of that, you've got to make enough revenue such that, or enough profit such that over your 11 million rand, you're beating a traditional investment. So it's a matter of, you've got to minimize your third-party costs as far as possible. don't want to give a figure of where ours is because it varies slightly, but I'd say it's close to 0.4% is the third-party cost. So if you've got a 1% premium, there's still 0.6% to squeeze from that. But obviously, that depends on how much you're investing because the 500 Rand becomes a bigger proportion. So I don't think it's a matter of there being a minimum level per se. I think it's more of a matter of as the level shrinks, so the minimum amount you should be investing increases. And as long as it doesn't hit 0.4% or lower, you can still make money off this. I don't know if you have anything to add there, Carel.
Yeah, I think coming from a bit of an economics background, people will continue with this trade as long as it's feasible, as long as it's outweighing traditional financial investments. So you can park your money in a bank account and probably get 8% without locking it up for too long. As long as crypto arbitrage is returning more than that, and the service providers like ourselves and yourself are willing to put in the work, I think it will be feasible and viable for clients.
Yeah. My view on this one is a little bit. It's going to ultimately, depending on the regulations, will in the end probably, if the regulations allow for a lot more flow, get closer to the cost of Forex, basically. And if it still remains tight, it'll basically cap out at that sort of 32-day notice account level. Yeah. But anyway, I think we're out of time. So thank you very much. And yeah, hopefully you've learned a little bit more about Crypto Arb. If you need to get hold of any of us or want to learn more about us, you can come up to, we'll be around the conference for the rest of the day. But just as a reminder, you've got Carel de Villiers from Schiffley, Harry Scherzer from Future Forex, and I'm Blake from VALR. Thanks very much.